Hi, everyone. Is there anyone here that can speak? Who I can hear?
I don't know. Can you hear
Oh,
anybody?
yeah. Who are you?
My name's Margie Stein, and I joined your club, I guess it is, um, a few weeks ago.
Oh, fabulous.
I live in Florida.
Okay, great. So
Can you
let's.
hear me?
Yeah, I can. So tell me more about
Okay.
what you're doing and how we had the pleasure of adding you to our community.
Well, my husband and I, we live in Naples, Florida, and we had a very successful home building company for many years. And so we've been in the real estate market on various sides, for quite a while. And we kind of got interested in lending about 2 years ago
Uh-huh.
because the construction, it just doesn't make any, first of all, most small home builders just don't have enough money resources to compete with the nationals anymore.
Right, right.
And we know the business. We know how to fix things that need fixing. We know how to price things. We know. So we first started using our own money, and then we attracted some other folks who wondered how we were affording to live.
Right. All the other builders who are starving.
Well, some of them aren't builders. They're just, we. It's our story's kind of a long one. I'll tell you sometime maybe when we talk privately. Um, but so we basically lend on some different opportunities, a little bit on fix and flipping, but mostly on folks that are can't qualify for traditional money, and there's just lots of them.
Oh my
So,
goodness, yes. So you've
uh,
kind of become a clearinghouse for not only your own money, but other people that want you to oversee the investing. So are you doing the typical hard money, 10 to 12% or more, and then what, 3 to 5 points or something?
yeah, and I don't know how other people do it, but we basically we give our lenders part of the 12%. We keep part ourselves.
Oh, right, right. You got to make a
Yeah.
spread on there for doing the
Yeah,
bit.
and then we make a couple points up front. So,
Okay, great. So then, how what attracted you to
one of the people that has placed a bunch of money with me is a guy he's a little bit older than me, and he started talking to me like 6 weeks ago, and he said, you should really learn more about buying notes because you could marry that into what you're doing and then have multiple um,
opportunities? Exactly. You could
opportunities. So,
yeah.
so I don't, even though it's really the same thing, it's a different side of it. Um, I didn't really entirely understand it, so I started Googling and reading, and then your stuff came up, so I started listening to you. And um, I like your. I'm a mental health person by training, so
Great.
I was.
So if any of
I
us
kind
get
of like the
crazy,
fact that you, huh?
if any of us get crazy, you can help out.
Yeah, right, right. But no, there's, for lack of a better words, there's a lot of really scummy people in the money business. Well,
Yeah,
in all business.
that's unfortunate. I do hear that quite a bit. But yeah, so let's hope we can kind of change that. So,
Yeah, so I like that I like your, you come across as very authentic and honest. So that's really first and foremost, really important. Because even typically with any borrower, forget about other people that you're lending money to, but you can tell kind of who's going to pay you and who's not. So.
well, gosh, I really, really appreciate that vote of confidence, and I'm so glad that you joined us. And I don't know if you had a chance, but there was we did last month's transaction review was going over some of the differences and similarities between private lending and discounted notes. I think,
Um,
yeah. Did you happen to see that?
I don't think I saw that. I watched a couple of other videos of that. I watched some gal from uh, Wisconsin, and I watched some guy out in California who's the crystal baller who like is
Oh
going to
yeah,
tell you.
Bruce Norris. Yeah.
Yeah.
Yeah, well, excellent. Well, I'm really glad to have you along, and hopefully, you'll quickly learn how. I think it's a perfect tool. I mean, it's really the same knowledge, just a different twist on it. And in fact, when I'm writing a book, so far I've got the title. But
Okay, that's good.
it's going to be just on notes and help, like creating this grid where people can easily understand how they relate, because what I find is people go, well, what's private lending? But no, I'm doing trust deed investing, or no, I'm doing note buying, and they don't understand that it's kind of the same thing. There's these multiple different words for it, but you'll find that your thinking process will be fairly similar. So I'm really excited to have you on board and to bring your knowledge and experience. Anyway,
Right,
so here
right.
we are at the May transaction review and calculator practice. This I've just chosen one deal to go over that I think illustrates a couple of good points, because sometimes you learn more about a deal you won't do and why
Right.
than the deals I have done. And so I've closed two loans and two notes and one seller carry lease back with option in the last month since I've talked to everyone. But I'm just choosing one that it was actually kind of funny because my ego got all I got all offended by this email, and I just have to laugh at myself when I get offended by stupid things. But I think it became a really a really good illustration for people. And he was so disgusted with me that I wouldn't buy this note or make a really good offer. But I'm going to explain why. So, when you're out on the internet, or you've put yourself out, like you do silly things like write books and make blogs and videos and things like that, you get a lot of people contacting you, and some it can be really interesting. Let's put it that way. So anyway, you can read this, but every now and then, I'll get someone who wants to broker. They're a note finder. They took a class, and now they're trying to, just peddle some notes to raise some cash, which I certainly appreciate that. I was doing that in the early part of my note career, and it was really frustrating. Sometimes these note brokers or note finders are getting notes from their own direct marketing, or other times they get note information for, like, they'll just go up on the website, and they'll just try to send it to me, like, gosh, you know what, if it's up on the website, I can see it myself, and also a million other people are looking at it too. And so to me, the stuff that's posted up on sites is kind of a big time wasting sort of activity. But anyway, even when, like, a broker or finder, even when the broker is fairly well trained and a professional, it's rare that a brokered note actually closes. And when the person really has had marginal training in notes and in lending in general, the conversation is almost pointless. But anyway, this guy, he sends me an email, and it's got this big thing in the subject line: well performing notes, make your best offer. Like, instead of just like impressing me with the quality of the note, he's got these like really slick marketing lines that he uses in his his emails to me. So anyway, it's just funny. But I can respect everyone's, like, working hard, so I try to get back to everyone. And he goes, well, here's how it is. Here's this great note. This is a property in Cassopolis, Michigan. I don't know where that is. I haven't heard of it before, but I'm assuming it's a nice place. It's owner occupied. The value of the property, they stated that they got an appraisal for 68,000, and that's nice, but it doesn't mean anything to me at all. I'll always order my own BPO or broker price opinion before I'll pull the trigger on anything. The sale price was 65,000. and that was clear back in 2003. So we can see that, wow, there's quite a bit of seasoning here. That was what, 8.5 years ago? Okay. The down payment was $2,000, which was a 3.1% down payment at the time. So that made the first note and deed 63,000. And so because I need to pull up my little HB10B2 here that I like, I'm going to go back into just PowerPoint mode, but let's see, move this over a little bit further. Anyway, so let's see, clear all. All right, so here's our first note and deed. Let's just go plug these in. This is 63,000. That's present value right there. Okay, and it's at 8%, so 8. And the payment is $450. When he gave me his little worksheet, he didn't tell me the term. He just said, he gave this actually just 120, which makes it sound like, you know, is a 10-year amortization. Anyway, I knew the payment. He told me the payment was $450. I mean, another thing, just FYI, when somebody submits a note and the basic numbers aren't exactly right or they're missing information, it's not exactly inspiring, because like I said, it's hard enough, you know, from someone who really is knowing what they're doing, it's hard enough to get those deals to close. So when I'm actually having to educate people on the basic stuff, it's kind of like, oh, okay, yeah. Anyhow, so I entered all these things, right? And then I solved for n by just pressing the term here. So then I can see that it was very odd. You know, obviously this was a very unconventional way that they put this note together. It's amortized over 407 months, 7.5 months, basically. So what is that? 30 years is 360. So we have, I don't know, 35 years, something like that. Amortized over a really, really long time. But they made it due in 10 years, which, you know, if you're going to have a balloon on an owner-occupied, which I really hate anyway, that whole conversation, you know, it's respectable to have it out, you know, 7 or 10 years. I can't fault him for that. But so anyway, here he's at the point where they've made 102 payments and there's only 18 payments left to go. But then here's this balloon hanging out here. Okay, so let's see. He didn't give me this, what the balloon amount was, because probably he didn't know. But here's how we would figure out and verify what that balloon will be. So basically, we press the orange button that gets us to the amortization schedule here. And I don't know if this is big enough to see. I can't make this bigger. But so what we see here is we're going to look for 120. Okay, right? So here's where we can get what the balloon is, because at the 120th payment, which is in 10 years, the balloon is going to be $57,511.80. So that's how I put that in there. So now I go back and I go, let me put in the future value, because future value is where the balloon goes. So 57,511.62, and payments and balloons are always put in a negative number. So now I'm going to enter that into future value. So this is how this deal was put together. So we have this balloon on our owner occupant. We have this balloon coming up in a climate where, you know, there's all this mortgage fraud and they're trying to, you know, find people to hang. Everyone except the bankers and the Federal Reserve, they're trying to hang them. So anyway, there's a climate of really protecting consumers. I wouldn't want to be foreclosing on an owner-occupant with a balloon, frankly, because if I end up in front of a judge, I'm going to look like a creep, because it seems like I set them up for failure. Okay, I'm sure this guy, when he made this loan, thought, surely in 10 years, this property is going to be worth much more than they paid, and they'll be able to refinance. And then I'll be out, right? But as we know, prices really haven't gone anywhere. In fact, in a lot of areas, prices are back at like pre-2000, like 1999, maybe early 2000 prices. So I'd be surprised if this will appraise out, even at what even at what he sold it for, 65,000. So next slide. Any questions? Just type them in the little chat box. All right, so what stands out to me? Cassopolis, Michigan. And my first thing is go, okay, well, what's the population? And if it's if it's below like 30,000 people, I'm not sure I want to invest there just because there's not a big enough market, a population to support, if I end up accidentally taking this property back, I need to know that I have a reasonable exit strategy. So I would do a little bit of, figuring out what this town is about, and then owner occupied. Now, just to show you how different things are from the regulation, that we've had going on. Usually in the old days, when I was learning, owner occupied was much preferable to investor paper. But I feel the opposite now, okay? I'm like, yikes, with a balloon, like I already talked about. I don't want to be in front of a judge because there's somebody who decides to sue you, for foreclosing on them. That's not going to look good. I don't like that. I don't like buying a balloon on an owner occupant. I'll usually buy all the payments up to the balloon, but probably not the balloon, unless I buy it in a way that I'll show you in a minute. Okay, we have the sale price 65. No. Okay, down payment 2,000. My goodness, $2,000. Seriously, this is basically the equivalent of first and last and security deposit. This is not a lot of money. This is not a lot of protective equity or skin in the game. Okay, I got a question. Oh yeah, I mean, Wayne is saying the size of the balloon makes this a bad note. I know. Can you believe that? I mean, check it out. This basically, he's been paying interest only. In 8.5 years, he's only paid down $5,500 on this note. I mean, good grief. I mean, check this out. If you wanted to figure out, how, if it was just interest only, we could just go, okay, if it was a $63,000 note and times 0.08, right? That gives us the interest, 8% interest for a year divided by 12. Interest only is $420 and his payment was $450, so he's making, barely above interest only, which is not good, because then in this situation, then you don't build protective equity, every year, because the balance that's owed you isn't going down at all, barely. I bet this might be less than rent. Like if you went into this area, Cassopolis, Michigan, could you rent for 500 or 600? So basically this is a glorified renter. This is not a note payer to me. I mean, this was a good play, betting on the people could refinance. Now this guy is trying to sell. He apparently did a few of these, because this is just one example coming from the same payer, and that he's peddling the same kind of note, and he knows that those balloons are never going to pay off. So there's not a lot of skin in the game. In fact, he might be able to just go, hey, forget taxes and insurance and maintenance. I'm going to go rent somewhere for $500 and save myself some money. So he could walk away from this really easy. And now that is a really extraordinarily long amortization. Oh my God. I mean, even 30 years to me is long, but then he went, even longer than that. We already said that. The balloon coming in, no thank you. Credit unknown. Will they ever qualify for bank financing? Probably not. Even if they could with credit score, probably their property won't appraise, or by the time they can qualify, maybe rates are double digits or something crazy. So I bet that this balloon's never going to pay off. But just out of, curiosity, if I believed in the balloon, let's see what I would pay for this note. Okay, so I would verify the value of the property. I would quote it, assuming that they're right. I would quote the note, but part of my due diligence would be to verify the actual value of the property, which can be a little tricky, as we all know. Then I determine my maximum ITV, like in the lending business, it's LTV, loan to value. But in the note business, it's just I call it investment to value. So it's still the same thought processes. You got to cap off your exposure at a certain percentage of the value of the property. So to me, I'm pretty conservative, right? Usually I like 50% or less, but sometimes I'll go up to 60. So let's say I'm feeling generous and safe that day because of various other factors. So then I would figure out this is the most I can risk on this note. This is before I calculate yield or anything, right? So I go 68,000 times 0.6, so that's 60%. That's how I come up with 40,800. That's the most I'll risk. Now we know I've got a note here that gives me 18 payments are left at 450, and then at the end of that 18 months I'm going to get, supposedly I'm going to get this balloon. So if I believed I would really get that balloon, let me have a desired yield. To me this is risky, so I'm going to say 18%. Plus inflation's going up all the time. So I mean, seriously, I like to buy you know, well, sometimes I can buy at 12 or 13, but usually you have to do more, especially the longer you're hanging out. Like I said, I know I'm not getting this balloon. So anyway, so if I thought I was though, so we have 18 months left to go. I want 18% yield. I know I'm getting 450 a month and then supposedly a balloon. Let me solve for what I would pay. So I simply click PV, present value, and that gives me $51,043.96. So if, but I already said, wait a minute, and then I go back, well, what's my ITV, my investment to value maximum? Is 4,800. So I cannot, even though this is it would meet my yield requirements, it's not gonna, my risk is gonna cap me off there. So, okay, the most I can put out of pocket on this property, if it's really worth 68,000, is this. Okay, that's going to be my present value. So if that's all I'll pay, if the note seller says yes, let me solve for what my yield would be. Well, then my yield would be 34,000, no, 34.47%. So 34.5% if this balloon pays off. Okay, so that's how you figure that. Any other questions? Okay, so next thing. But because I don't believe in the balloon, okay, here's my thought processes. Then, okay, I'm still going to do the same thing. Always starts with the same thing. Verify the value of the property. I'm going to assume until proven otherwise that it's what they said. Determine my maximum investment to value, 40,800. Now, because I'm going to pretend that this is a non-performing note. To me, this is not a performing note, a nice, steady, easy, safe one, because it will probably be non-performing once we get to the balloon date and they can't pay. So I assume I'll have to foreclose, and I'm going to have to imagine how I'll like being in front of a judge pleading my case, because there's a chance that they'll sue you or create some sort of commotion because of all the consumer protection, which some of it is very good and some of it's just oppressive. Anyway, I would check the foreclosure laws. So I would assume like I'm buying a non-performing bank note. So I would want like just pennies on the dollar basically for these notes. I have to figure out how much is it going to cost me and what's the time frame for foreclosing. Are there redemption periods? Yada, yada, yada. I have to factor in that the house will be worth less, probably from prices softening, but if not that, probably they're going to trash them, right? If you're foreclosing on them, they're probably going to make it miserable by the time you get the property back. You'd be actually probably come out ahead if they just go ahead and burn it down. Then you get your insurance money and be done with it. So based on all that, the most I'm going to risk on a property that is, worth 68,000 would be like 25,000. And so basically to me, I would just treat it as a non-performing note if I decided I would not modify and extend. Because now I'm guessing somebody else that, let's say you live next door to this property and you wouldn't mind owning it and actually you wanted to own it, and you knew you could easily fix it up and you're handy, maybe you'd pay 40 or 50 for this note. I don't know, because then you're comfortable with it and you want to own, so you're buying the note to own the property. I don't buy like that. I don't lend like that, setting someone up and hoping for failure, and I don't buy like that. So, or notes like that. So Anyway, so just knowing I'm going to have all those potential things happen. Um, the other thing I could do if I didn't want to foreclose, if I knew that, like I might just do the normal things here. Maybe I will just understanding that the balloon will most likely not be paid off, but I know that instead of foreclosing, I will have to modify the loan and extend the term. So I just already factor in that I'm going to be modifying the loan and I'm going to assume that I'll have to keep it, the payments at what they can afford, which they've proven well for 8.5 years that they can afford $450. Because, like I said, it might even be cheaper than rent. But there again, if I plug in my desired yield, here's how I'm gonna reverse engineer that transaction. So now I'm gonna assume that, let's put 0 in future value. I'm assuming there's no balloon. I need to fully amortize the new note that I'll create to these people. So then let me just see, I want 18% yield, put it in there. And let's say I want to see what happens if I amortize it over 20 years. Okay, they've already been paying on it for almost 10. Let's see if we can get them paid off in 30 years like a normal loan. So if I put 240 in N, now I want to solve for present value and see what I'll pay. It says I'll pay $29,158 for this note, pretending that it's a fully amortized note at this monthly payment and has no balloon. Okay, so either I'll buy it as a non-performing note at $20,000 or $25,000, or I'll know that I can extend this out, and even if the property came back at 60,000, I'll still be happy with this. I mean, this is an awfully long time to hang out, and a lot can change in that amount of time, but still, this would keep me, if the property at least appraised for 60,000, I'd be at less than 50% investment to value, and that would seem okay to me. So anyway, so I said, Gregory, I said my quotes for these types of situations would be something like 50 cents on the dollar, or possibly even a little lower. These balloons will never pay off, and they're very long amortizations. And then he retorted, he was so disgusted with me, said, Dawn, I'm sorry, but I'm going with another investor. Again, your offer is too low, and not convincing. And it was so funny. I got like, I'm not convincing. I was doing you a favor, helping you understand the market. Anyway, it was just funny. It's like, okay, remind me not to waste my time quoting these sorts of things or whatever. But I'm glad there's someone else out there. Maybe he'll put this deal together, and that's great. But man, either they don't know what they're doing, or they're buying to own and they're very comfortable with the local market. So that's all I can say. But the not convincing part is, I don't know. I thought, how can you really think those balloons are going to pay off? What, the bank? They're getting a bank loan? Nobody's getting a bank loan. Either the property won't appraise, the appraisals won't come in, their credit's not going to be good, whatever. So I don't know what's so crazy about that. But let me try to open up the lines again. Anyway, so any comments, questions about just any of the numbers that we just went over? There's about 8 of you here or so. Anyone want to pipe up? Hi. Who do we?
Hi, Dawn.
Oh, Malik. Great.
This is Malik. This is all new to me, so although you was going through the whole breakdown, it's all
Yeah, well,
foreign to me right now.
I'm hoping that if you hang around a little bit and you look at these enough times, I mean, is there anything that like you'd wish I'd just do one more time, or do you have any general questions that might help? Or
Well, again, like I said, I'm new to this, but what it is like I'm trying to do some marketing, and I did like a small little marketing campaign, and I actually came across a inherited a seller who has they inherited a property, and they're considering selling. I actually went and took a look at the property in Rahway, New Jersey, and the lady said she was waiting to get an appraisal, see what the property is worth.
yeah,
Um, based on my, the good thing is it doesn't have a
Right.
mortgage.
So they inherited it so that it
Um,
feels like free money to them. It's not like money they worked really hard to, um, you know, pay it off. It's sort of like bonus money, right?
right. Um, and what it is, it's about, I think it's either three or four heirs, which is like three sisters and one brother. I think that's
Oh,
it.
brother.
Um, but of course, I would like to be able to put two type of offers, which may be like an all cash offer, and then maybe like a owner finance offer.
Yeah, definitely. It's common for me
You
to
know,
throw out like three different offers. One's in all cash, and then one's with maybe 10 or
right.
20% down, and then one's with like 5% down, but looking more like the purchase price that they're looking for. But then, if I give them their price, you can bet that I
Uh-huh.
want my terms. So, yes, I mean, it's possible. And so, when you come with that deal, since you're part of the club, why don't you just email me and please give me 2 or 3 days to get back to you. But, like, if you want to powwow about it, you get the basic deal structure. We can just sort of chat on the phone or do a quick little email back and forth to sort of help you make an offer on that property and see if there's a way you can work that into some, either chunk money or passive income somehow.
Well, that's what I'm looking to do, either or, because I'm just getting started. I mean, I do have a full time, but it's like it's a little rough for
Oh
me
boy,
being a
yeah.
single father, and I'm trying to, I'm using like my job, my monthly income money, which is my paycheck, to kind of like get my real estate up and going. So I figure owner financing might be the best way if I can't get a cash deal, and I don't
Yeah,
necessarily have
but
the
if you
money
have a good
myself.
enough
So
deal, the money will be there for the deal. So it's mainly about finding it and then just figuring out how you want to make your offer. So and again, I invite you to send me an email when you get to a point, where, even if that's tomorrow, and let's put it in the hopper so that I can help
mhm.
you just get your head around some of those ideas. Okay?
Sure. What's the email address?
DAWN at notequeen.com, and that goes right
Okay.
into my inbox. Yeah, in the meantime, Margie, I know. Oh my goodness. See if, no, you're unmuted. Yeah, I can't believe that. People are
Yeah,
loaning
I
and
would.
buying these types of notes just like they're bidding too much at trustee sales these days.
Well, I mean, I have a decent flow of deals that people
What?
call me about, and
What?
I turn down way more than I take.
Okay.
But a lot of them, when I call to do follow up
Oh
to
no,
get
it's a
more
lady
information,
um
the
Dawn.
broker
She
will
does
often say, and I'll think, what? Like, I'm still gathering the information to evaluate whether
God,
I
that
would
is
even
just
consider
crazy.
it.
Well, I mean,
So,
yeah, I mean, I'm kind of that way because, like, my underwriting as a private lender is a lot stricter than I guess for instance, I won't loan on after, I don't count after repaired value. I count purchase price because that's the real value of the property. But otherwise, they're lending 65%, 70% of after repaired value. And I'm going, are you kidding me? If they don't do the work and you're left with having to foreclose, then make sure permits and zoning is fine, and then make sure that then finish the work and then put it on the market and pay closing costs. You might get your money back out, maybe.
yeah,
you know
I mean, the only reason we would consider those is because it's been our business. But I wouldn't recommend like this guy on the phone.
yeah, Malik or
What's your
Malik.
name? Malik, you said? Yeah, I mean, I would not suggest you go any near anything like that.
For me, I'm many times dealing with people who are not like real seasoned investors, and they need their money to help them in retirement. They can't, they're not dealing with extra millions laying around. They can't afford to lose it. And so I'm very conservative.
Right.
But yeah, I agree. A lot of people are throwing money. I think they're going, well, anything's got to be better than the stock market, and that might be true, but still, you got to be smart about it. And you can't create liquidity like this without kind of just having another little bubble of some sort, in my opinion.
Right. Now, do you use a broker? Are you a broker or you
Yeah,
use it?
I'm a broker,
Okay.
real estate and only investment loans, not consumer loans. But anyway, hey, Wayne had another comment. Say, could a bad note be reworked into a good note by a note buyer? Yeah, well, so yeah, I mean, it can be. I mean, there can be a modification done, but then you have to have the approval and the okay of the payer, and sometimes they don't want to sign a bunch of new papers or they don't want to do something. But like in my mind, making this note into a better note because I don't like the balloon. I'm very suspicious of it. I'm not going to assume they can pay it. So if I make it into a better note, still to keep them being able to pay the same, which I know they can pay. If they agree to pay more, that's great. But why would they? I can't assume that they're going to say, "Oh, please give me an opportunity to pay $700 a month instead." I can't really assume that. So but once in a while, yeah. In fact, Wayne, that deal that we did, that you referred to me, that little one in Arizona, we did close on that. I think I told you that. And I just called Gertrude up and made sure she got my little payment coupon so she knows where to send the payment. That was kind of funny. She couldn't find any of her note documents. She had no original note. She couldn't find a settlement statement. She couldn't find anything. She thinks her son has it, and her son's mad at her and won't give her the paperwork. So we worked a fancy go around to still get the deal done. But anyway, we turned that deal would have fallen on and died on the vine, except we found a way to make it good because she had other collateral that we could secure some money with. So, but anyhow, so I guess we can. If there's nothing else right now, we'll just wrap this up for today. I'll have this edited and probably up tomorrow. But our next our next meeting is on May 17th, I think. If you go over to Owner Financing Club and you want to know, the sort of events going on, it's right here on Owner Financing Club, the events calendar. So it looks like speaking in.
So, do you know what was the outcome of Bruce's crystal ball?
You know what?
Did you know?
I wasn't able to go to that, and I'm sure that I'll probably hear on the 10th, which is that next week. I'm going to be speaking in Pasadena. I'll probably hear through the grapevine there, or a lot of my community members, follow him as well. So usually I
Uh-huh.
end up finding things out without having to go to everything, which is nice. So let's see. If you're in the LA area, I'm speaking at For Investors by Investors next. Is that Thursday? And then I'm speaking to a bunch of commercial real estate brokers at Southland Regional Association of Realtors in the Valley. And then our next club call is 5 p.m. Pacific on Thursday, and that's a guy who's doing a lot of subject to wrap sort of transactions, buying property for buy and hold just for the cash flow. So, and then on the 30th, I'll be in San Diego. So, hopefully, if you're there, you can drive down and see me. And if you're part of my club, I can get you in for free to this speaking engagement in San Diego. So be sure to email me if you want me to get you on the list to come for free to that. So
Can you give me a plane ticket too?
yeah, yeah. I don't know. I don't know if I can handle that one, but
Okay.
yeah. But anyway, thanks a lot, Margie. It's great having you on board, and I
I'm
hope we
gonna
can.
call you. Are you generally around during the day?
Yeah, it's you'll just probably leave a message since I rarely answer
Okay.
my
Okay. I
phone.
was gonna ask you some questions, but I'll call you. I have a few questions for you.
Yeah, so let's, leave me a message and then we'll just play a little phone tag. And if it gets too crazy, we'll
Okay.
make a phone appointment or something. But yeah,
Okay.
we'll just have
That'd be
a
great.
quick chat and see what makes sense. So welcome aboard. Hey, thanks for being
Okay.
here, everyone. And we'll talk soon. Take care.
Okay.